Hello guys, welcome back to Residencia. In Residencia, we talk about how to help to defend your international structure, defend your business abroad, and if you are tax resident in a high tax country. Normally, the high tax country means country in European Union or in other part of the world where the tax authority are very, very aggressive. And here in Residencia, we provide exactly this service. So we defend you against tax audit. So we make sure that you have enough proof, all the documentation need to file and to pass the place of effective management test, the principal purpose test, substance over form test, and all the CFC rules as well, and all the anti abuse laws, which are the classical ones that basically they resemble a lot of these international anti-abuse rules, but in the context of a local jurisdiction. So the local jurisdiction itself, they implement some local laws to avoid abuses. Classical cases when you have a fake company abroad that don't really run a business abroad, but it's you that runs everything from the high tax country and you are a tax resident there. So we help people with this structure. We make sure that these structures are defendable, real, and compliant with the law. Now, in this specific video, in this specific episode, I want to talk about Gibraltar because it's one of the jurisdictions that are quite misunderstood. And I'm going to explain you how you, if you're living in Gibraltar, if you're tax resident in Gibraltar, you're going to have 0% taxes in your company, at your company level, at corporate level. So I'm going to explain you a concept that nobody talks about it. So you have a lot of tax consultant or YouTubers displaying their knowledge, flexing their knowledge all around YouTube, showing several countries and talking always on the same subject, which is basically the same concept that you have always heard about it, the same 0% tax here and there, dividend, holding structure, whatever, blah, blah, blah. But they don't actually go in details into local national laws to understand exactly how you can obtain 0% taxes. So here in Gibraltar, we have the famous 15% corporate tax, which is the one, let me put it here, maybe it's more clear, which is basically is the corporate tax if you incorporate a company in Gibraltar and you run the business there, okay? And your clients are from Gibraltar itself. Now, obviously, if you're creating a company there, you want to set up the residence there because you want to have a zero tax status and invoicing and issue invoices towards foreign client, foreign business, foreign company, wherever it is, wherever they are located. And that works very well because Gibraltar uses the principle of territorial taxation system also for companies, not just for individual, means that everything that runs, every services erogate given towards foreign entities, foreign persons and entities, of juridical individuals, is not taxed. But at the same time, Gibraltar uses the place of effective management principle. And you might say, okay, so then it doesn't make any sense to incorporate a company there because if I'm going to set up a company in Gibraltar, if I'm going to set up my tax resident in Gibraltar and from Gibraltar, I want to open an LLC in the United States, it doesn't make any sense because the Gibraltar tax authorities will requalify my LLC in the United States in Gibraltar. So it becomes a local company. And then it's a problem because you know that if you're living in another country in Europe, this creates a big problem because then if you requalify the foreign company as a local one, it's a mess. You have to pay all the fines because you didn't publish any balance sheet, you just didn't declare this company. And at the civil level, you have some fines, and of course, at fiscal level, you pay local taxes. But with Gibraltar, there is a big difference here, a very, very nice solution that basically allows you to avoid this problem. Okay, so Gibraltar doesn't qualify foreign company as a local one from civil point of view. Civil point of view means that you're gonna get fined if this company wasn't registered. If the local tax authority of Gibraltar find out that you had a foreign company, didn't declare it, they only requalify it at the tax level. they only ask you to pay taxes on it. So if you have an LLC abroad, probably you have to declare what you have earned with this LLC abroad, also in Gibraltar, and the local tax authority will tax it. But, and here comes the trick that you have just discussed before, if Gibraltar acts as a local, in the local system, tax system, territorial taxation system principle, even if it's a foreign one and you didn't declare, it doesn't matter because they don't care if, from the civil point of view, they don't care. But since for sure all your clients of this LLC were foreigner from third countries, they are not get taxed anyway. So the purpose of this video is to show you that there are certain jurisdictions that even if they applied the anti-abuse and very aggressive let's say anti-abuse rules, even if there is the place of effective management principle there, even if it looks like be compliant with all the most restricted European Union laws, because Gibraltar, okay, it's close to, is not part of the European Union, but stay in the area of the world, really pressured and convinced to use this kind of anti-abuse rules. Even though you have all these things, you still have zero taxation possibility. And then you skip completely the corporate tax at 15% flat, because everything you have earned from foreign client, so the profit coming from abroad for Gibraltar tax authority is not taxed, regardless if it's a local company incorporated in the territory or incorporated abroad. And that's the reason why you have to really go deep on the local national law when you want to understand these nuances, because it allows you to really comprehend how to structure a business internationally, and actually how to avoid any issues with local foreign tax authority. Because when you have an international structure means not just two companies in different countries, but also when you are an individual set up in a resident in a country and have a company in a third country. Okay. So it was a good surprise to know that Gibraltar works in this way. There are other jurisdictions that do not care if, they actually the other way around, they care that the company was incorporated abroad. And if you want to know more about this kind of knowledge, if you want to acquire this kind of knowledge, know more about it, you can, in the description of the video, you have our calendar link, the book consultation here in Residencia, and we can help you to understand if your company, actual company, or multiple companies are bulletproofed against tax audit, and also talks about eventual optimization from tax matter. See you to the next content. Bye.